All right, we're officially on. It looks like 5 people have joined so far.
Nice.
We are going to get things kicked off in about 3 or 4 minutes. We have a couple of questions that we're going to get started with in the chat, but really wanted to welcome everybody who's joining. So the first question we have for people that are online, and I'm going to ask my panelists this as well, is where are you calling in from right now? I'm going to start. So I am in Lynnfield, Massachusetts at the moment. In the comments for people who haven't used StreamYard before, it's in the bottom right of your screen. All right, we've got Brittany from Wells, Maine. All right. Johnny Moe's here. Mark, I didn't know you were in Charlestown. I used to live at 30 Oak Street, right at the street atop of Santander Bank.
Yeah, I'm right near there, actually. I'm on Baldwin in Charleston.
Okay, yeah, you're right around the corner.
Yeah, just moved here a few months ago, or I guess 6 months ago now, so a little bit longer than a few.
Another Bostonian. We got Mitchell on here as well. Welcome, Mitchell. All right, my second question again. We're going to get things kicked off in 3 or 4 minutes. I just want to give people time to join. Typically, these kick off a few minutes late. Second question is, how did you find out about this webinar? Was it me or Justin or an Instagram ad? Like, just curious how you found out about it. I'll put mine in there too. Sean Bakhtiari, a good friend, introduced me to Justin a few months ago.
Yeah, I know. We just met, October of last year?
Something like that, yeah.
Time flies.
Justin and Tony, Brittany from Instagram. And Johnny, of course. Johnny's one of my insurance agents.
Awesome.
I think Joe McCabe is joining as well. Another insurance guy. And then Mitchell. All right, Taylor's on. Taylor he just moved from Seattle to Melrose, Mass, which is easily the hottest single-family market in Massachusetts right now. And Taylor, I'm glad you're on, but if your wife goes into labor, you can leave anytime. She's 9 months to the day, I believe.
Oh, congratulations. That's exciting.
All right, we'll give it 1 more minute, and then we'll kick things off at 12:04.
Perfect.
Do we dare bring up the Super Bowl, or does everyone just not want to talk about it?
It's too soon, Alex.
Too soon.
Gotta wait.
I mean, I'm kind of glad. Like, if it was close, I'd be a lot more heartbroken. But yeah, it's just.
I thought we had a chance at the end there to come back.
Yeah, when it was 22-9 and we were driving, like after we threw that nice pass to Mac Hollins, I was like, that's our identity. Like, let Drake May scramble up the middle if he needs to. And let's take some shots. Like,
yeah,
the bullshit of like the whole first half on like 2nd and 2, handing it to Ramondre. It's like, that's when you want to take these shots, these trick plays.
Yeah, it was a tough game to watch.
Yeah. All right, so let's get things started, and I'm going to actually share out my screen. I'm going to go over the agenda and let these guys introduce themselves. Share screen. All right, just for everybody in the audience, can you just comment if you can see my screen now? Sometimes we see it on the presenter side, but you guys don't see it on your end. Can everyone see it? All right, Johnny, you're the most attentive. Probably most likely to win the Bruins ticket at the end of this, too. Awesome. So the agenda here, guys, we're going to start with introductions. We're going to talk about the different types of real estate investing, how private equity works, what's the difference between private and public. Then I'm going to allow the team to talk about their actual fund, New Era Capital, the eligibility, the criteria. We're going to talk through how do we source deals, what do we look for. It's going to be a ton of different education. I'm so glad these gentlemen were willing to join and get on and educate some of my audience. So I'll kick things off. Most of you probably know me. My name's Alex McKenzie. I grew up in a construction family just outside of Boston, moved from Wayland to Newton, moved to Newton in middle school, and then went to Bryant University, played lacrosse there. Right after school, got into real estate almost immediately, started doing fix and flips on the side, moving into houses, really house hacking, moving in with young buddies, roommates, really to help me fund my next deal. So, my main focus in real estate is extremely active things. It's fix and flip, it's Airbnb, it's ADU. Yes, the returns are phenomenal. We're pulling in as a company, Top Shelf Vacation Rentals, over $1 million a year in rental income. I can essentially retire by the real estate investments that I've made. But now I'm at that stage in my life where I want my time back. I've got 2 young kids. So passive investing with great returns sounds really awesome. So when I met Justin a few months back through Sean Bakhtiari, I was like, yep, I want to write a check. I want to be involved. I want to learn. And that's kind of how we got here today. So Tony, I'd love you to introduce yourself, then Justin, and then Mark. Thanks, guys.
Yeah, so Tony Fusco, founder and managing partner of New Era Capital. Live up in New Hampshire over on the seacoast. So, I get to spend a lot of time, in Massachusetts as well as New Hampshire and Maine, where a lot of our projects are. Originally started my career in construction, where I founded Fox Construction, a construction management company that specializes in ground up commercial and residential projects. As my years went on, running that company, I started to dabble myself in real estate development, buying spec lots, building some houses, doing some flips, raising some capital, dabbling in working with investors back in 2022. And then as things kind of progressed into 24, me and my business partner, Justin, we decided to, really build a company around working with investors where they can 100% passively invest, into real estate with no additional headaches.
Yeah. Yeah. And I appreciate everyone joining today. My name is Justin Jameson, founder and director of investor relations for New Era Capital. I grew up in Leominster, Mass. most of my life. And then I attended Phillips Exeter Academy, which brought me to the Seacoast, which I'm thankful for. And then from there, I played football at the University of New Hampshire and really decided that this area is where I want to stay and be, just because of all the Seacoast that has to offer. I started in real estate sales before I founded New Era Capital, where I sourced over $100 million worth of new development deals, working primarily with builders and developers. And then from there, that's really where we founded New Era Capital in 2024. We're developing over $50 million worth of real estate right now across New Hampshire and Maine, and managing people like Alex's capital, nearly $7 million of private capital we're managing. I owned a multifamily. I bought my first one in 2024 as a 5-family, had to renovate it. And then I actually just sold it about 6 months ago because I didn't like the dealing with tenants and headaches and all that stuff that comes with it. So really, it just is even a bigger belief of why I think passive investing is definitely a way to go. And so I appreciate everyone's time and pass it over to Mark.
Thanks, Justin. Hey, everyone. Thanks for joining. Mark Phillips, Director of Acquisitions and Development for New Era Capital. Originally from New Jersey, played lacrosse at the University of Vermont, and then have been in Boston for the past 5 or so years. My background's more on the commercial side, where my last job acquired over 825,000 square feet of commercial space, which was roughly $220 million. And before that, I was a broker at Cushman & Wakefield, where as lead analyst, I sold over $1.2 billion of real estate. Thanks, guys, and thanks for joining.
Pretty small number, Mark. Let's pump those numbers up. Go ahead, Tony. All right, actually, we're good. We're moving on to the next slide. While we're popping in here, Justin's going to take us, or actually Tony's going to take us through these next set of slides. I'm going to ask a quick question in the comments. If you do own real estate today, would love to know how many doors you own, what states you're in, what type of properties, whether residential, commercial, condos, multi, etc. That'd be helpful for us to know who we're dealing with on the other side of the audience here. So Tony, I'll let you kind of rip through this part here.
Yeah, definitely. So, the core problem here and that, what we're trying to solve is that most people want to be invested into real estate. The issue is that, not only does it take up a lot of your time, it also takes up a lot of, personal capital if you're trying to do it, actively. And what this really kind of goes into on the next slide is, the difference between, investing, actively versus passively. If you want to pop over to that next one, Alex, perfect. Yeah.
This is the big slide. Here we go.
Yep. Yeah, exactly. So this is the main thing. So when people think about investing into real estate, There's a lot of, ways that, first come to mind of, self-managing rentals, buying, one to, two families, buying a flip house, renovations, short-term rentals like Airbnbs. The issue is that not only are you the investor and you need to come up with capital to buy this, you also are the operator and really the, property manager dealing with the day-to-day, making, getting the phone calls, all day, every day. It's nonstop. Where on the private side or the passive side, that's where you're really able to, give your money to, a group of experienced, professionals that are going to kind of allocate those funds directly into real estate deals. And you kind of still get those updates. You can kind of pick and choose exactly what areas you want to be invested in. But you don't actually have to, screen the phone calls when they come in, after hours and you're trying to check out for the day.
Love it. So, yeah, most of what I do, if you think about like a spectrum, right? I'm the most active investor I know. Like Airbnb's, ADU, fix and flip, like hands on the ground, basically running a small business, right? It's not buying a piece of real estate. You're hiring a business. You've got cleaners coming every week, quality control. You've got all different types of contractors, lawn care, snow removal, HVAC. People are visiting your house constantly. The thing that, Justin sold me about his fund in like 10 seconds over a beer in Newport when he was like, you essentially don't really need to do anything. I was like, okay, I don't have anything on this passive area, and I'd like to do more in real estate, but I can't. There's no more hours in the day, right? I run 3 businesses right now. So like the only way to deploy capital and get money back in something I believe in is to do, passive investing. So for Mark and Justin, are there any other things we're missing here? Are there any other types of passive investments you can do in real estate?
So they do have different, passive investments you can do. I mean, a big one that people think of is public REITs. You can invest in public REITs, but the thing with that, and we'll get into that in some of the slide deck, is that you just feel disconnected. You don't know really where those funds are being deployed. You don't get as many updates. You don't really have the relationship with the manager. And then on the other side, you can do JV partnerships and stuff like that with experienced people that are in this space.
So like hard money type of stuff with a contractor?
Hard money and stuff like that, totally. But you're just investing in one particular deal when it comes down to that stuff. So it can be a little bit more risky, and you got to really trust the people that you invested with when you're doing just hard money and investing in one-off house flip deals and stuff like that. Because if that one deal underperforms, then you're stuck in that one deal. And if you can't trust the guy that's managing it, you're just stuck in that relationship as well with whoever you invested with.
100%. And like, I like the idea of this being spread out across multiple states, multiple categories as well. Like my dad growing up did like large scale fix and flip ground and construction in like Newton and Waltham. And like, guess what? 01 happens every once in a while. 08 happens every once in a while. So you're invested in like one deal. If for every reason the numbers of that deal don't work out at the end, you're kind of out of luck. So like spreading it around was really important to my decision in investing as well.
Yeah.
So I'll come back to Tony on this, but like obviously there's tons of hidden costs. I could probably speak to this.
Yeah, definitely. No, Alex, I think you did a great job already, on the last side when you kind of said, when you go into a deal, it's not only just, what you see on paper, closing costs and, kind of basic, maintenance. It's you really are running a second business is what it really comes down to with all the hidden costs. And it does just, take a lot of your time and, it's just not something that you can just throw on top of your normal work week.
100%. And the two things I missed in the bullets here are like payroll, human resources, like funding, checking accounts that, a capital.
Exactly.
It's like, it's never ending. And like, I'm one small guy with, 11 doors. I think I have 4 LLCs, like 32 bank accounts, 15 credit cards. It's just nuts. Even just to manage the little stuff that should be easy is not easy.
Exactly. And then, so this kind of just goes over a, rough chart of, really what the landscape looks like with the different types of investments. So on the, left side and in the lower side, that's kind of your public markets where, it's high liquidity. You can, buy in and exchange, pretty easily. But you really have no control over it, whatsoever. On the other side, you obviously, get more of your time back. You have, more control. You can actually, identify the areas where you want to invest, but it is a little bit less liquidity because on, funds like this, you are usually tying up your capital for, multiple months to multiple years at a time.
Yep.
And then, really kind of, going over the, the execution through this, it's pretty self-explanatory, but, once, an investor comes in with our capital, the funds go right into, the investment vehicle, which is, either the fund or the syndication, that then purchases the real estate assets. And if it's a rental deal, obviously once they start producing, that starts kicking off, quarterly returns, and or what we mostly do is, kind of an exit sale where we sell the properties and those proceeds pass back up to the investors. And then really, this is, quick slide, but, private markets can feel different. The access into getting into them, it's not, a mainstream, area. You got to know the right people, the right experts. It's longer time, horizon where, it takes, months to years to execute on these. Again, it's not a quick trade-off.
No, Devin's actually one of our clients. Devin's a great guy. He also owns an HVAC company.
All right, Devin. I know a Devin Coleman that works at Compass too. It's a small one.
So, and this is one of the biggest parts of, the, real estate world is that when you're buying into this, it is backed by a physical asset. So it's a little bit different than buying, into the stock market, or, even bonds and things like that. There is something physical there that is backing your investment.
There's not anything physical about a Bitcoin. You can't hold one. No?
Exactly. And that's the nicest thing, there is something physical here that, you're able to collateralize on, which is, what makes it able to produce these, higher returns. And then really, this is a more generic just with any, real estate investing, but, it's three ways of, kind of income. One is cash flow. If it's, rentals and multifamilies, you're getting that rent that's coming back and creating cash flow back to the investors. We usually lie within the second bullet here of value creation, where we're finding raw land and or opportunities that we can, redevelop and then kind of have an exit of a sale that, then, creates that value. And then obviously appreciation and, all these assets. It is real estate. The economy is always growing and things are going to scale with, time. So there's always going to be built-in money there.
So when you talk about returns, Tony, in my world, returns are things like cash on cash return, cap rate. What are some of the definitions and the metrics that you look at? Maybe Mark, this is a good question for you, is like, what type of numbers are you looking for from a return perspective? And do you care about cash on cash, or do you say, you know what, we've got $7 million in this fund. If we can deploy X amount of it and get a home run, which is $1 million net profit in 8 weeks, like what are we kind of looking for from a return perspective here?
Yeah, it's a good question. So cash on cash and cap rates don't really apply to what we do as much because we don't really build and hold rental properties. A lot of what we do is on the for sale side. So our main target is levered IRR, so just your annual return. When looking at deals, we typically won't even entertain a deal if it's below, with all of our contingencies and things built in, if it's below around an 18%, just because if the stuff goes wrong, that does happen all the time. We want to have things in place to manage that, to make sure we're getting our investors back their money and getting a return.
And Mark, what are some of those things that can go wrong? I know it's very hard to forecast, like excavation, for example, like how much ledge is really in the ground.
Yeah.
Are there any other like external factors that could come out of nowhere, like maybe rising interest rates? What do you kind of prepare for?
Yeah, a lot of it is like what you just mentioned. I mean, there always are issues when you're getting into the ground and things pop up here and there. Construction timelines can get drawn out. We do build everything in-house, so that's very helpful. But in the past, I've run into issues where you're getting quoted a 6-month timeline and it ends up taking a year, which really can eat into the returns. And then just even like you were saying with the interest rates, I mean, the market as a whole, right? If you're selling things and you're only having two people come look at a property versus the year before it could have been 20, it just really limits the sale timeline as well.
So what I'm hearing is shout out Fox Construction, and Tony should own more fun. We can deal with that later. I'm going to pass it over to Justin now to basically talk through the model, what New Era Capital does, how are they different, what makes them unique. Yeah. Obviously we just went through all the definitions. If there are questions on any of this, guys, just comment in here. We're happy to pause and go through questions. We will have Q&A at the end as well. But Justin, let's take you through the platform.
Yeah, so Tony was really talking about an overview of like passive versus active investing, and the platform that New Era Capital created was to help investors and people that want to be involved in real estate but don't want to have all the associated headaches. They want transparency, they want consistent communication, they want strong returns, and they want to know people care about the capital that's being managed, but without another full-time job, right? So that's why New Era Capital was created. We gave this platform to help people passively invest in real estate. So what that kind of entails is we handle all the sourcing of the deals. We have Mark Phillips who underwrites all the deals. We have Tony Fusco who structures the deals. We execute the deals. We bring in the bank financing. We actually manage the deals. We're handling the day-to-day responsibilities. We're handling the deal discretion. And then for our investors, this is really a truly passive investment for them. The only difference between us and like a big REIT is that we're really relationship driven. You get monthly newsletter updates, you get quarterly reports, you get to come on site and see these projects.
That's what I'm most excited.
Yeah.
Jameson on the job site. Yeah.
Yeah. So you get to see these projects come from life, transform from dirt into actually residential communities, single family homes. So you're part of the process, but you're not part of all the day-to-day responsibilities, the phone calls, the late nights. And it's a great way to be involved in development, be involved in real estate, but not have another full-time job. So that's what we do, and that's a platform we created. So again, what Investor does, it's not much. We emphasize at our company relationships. It's really the foundation of our company. All of our investors we have great relationships with. And that really involves everything I just talked about. We're sending them monthly newsletter updates. We're sending them quarterly reports. When they actually log on to, when they actually invest with us, they get a platform and they get onboarded into our system called Juniper Square. It's kind of like an E-Trade, but for the real estate market. You get to really track and manage all the investments. Wherever your capital you put with us is dispersed, you get to see where that capital is. You get to see the project updates. And then again, you get to come on site. And it's a very transparent process, and you get to feel part of all these projects because you hold equity in all these deals, just not dealing with the day-to-day stuff. So it's a very, way to be hands-off when investing in real estate.
So how do people get into this, right? It's not just anybody off the street that can do something like this, right?
Yeah. So this is this slide really just talks about like when you're getting into more active investing, and Alex, you can talk on this too, because you own 11 units, 11 doors right now. When you're just getting into real estate from an active standpoint, you got to be very hands-on, and it typically requires more money to bring into a deal than investing in a passive approach with us. You got to bring in a hefty amount of down payment. You need reserves, closing costs, contingencies, and all that stuff when you're buying rental properties. And on top of all that stuff, you need knowledge on how to actually enter and exit a property at the right time. Because if you don't, you can lose a lot of money. And like you said, Alex, like you're referring back to your father who got into real estate, he got into a couple deals and it was at a bad time. So it's about timing too. And these are all the things that kind of come together when you're actively being involved in real estate. And then, so for us, like I just was talking about, when you're getting into these deals, if you're doing it more from the active side, you have to take down payment, all this extra money to closing. For us, a minimum investment's $100,000, and you get access to multiple different deals. Our fund is spread across multiple deals at a time, and Mark's going to kind of show you that. So that $100,000 that you invest with us is not just going into one deal. It's going into our fund that we have open, and that fund is spread across currently right now 6 different deals, but that will continue to grow. So it really helps the diversification. And then this is just going over, that diversification part I was talking about. So you're not, there's different layers of diversification. One part is you want to diverse in different areas. Our fund specializes in the 95 corridor from New Hampshire up to Maine. We're doing different towns like Exeter, Kennebunk, Stratham. We're in different areas. Then you want different strategies. You don't want to just purchase a bunch of properties at the same time. So our fund is getting into new deals throughout scattered across different months, so that we have different exit timelines. So it's not just buying all properties at once and selling them all at once. It's staggered. And then the stage, what stage of the project it's in. If it's obviously projects that are breaking ground and maybe fully framed are further than the ones we just closed on, but you want different stages of your project so that you can mitigate as much risk as you possibly can. And then this is going into the risk. Really, there's different levels of risk with any investment. We like to just put it out in black and white, but you got market risk, execution risk, rate and financing risk when you're working with banks, liquidity risk, and then concentration risk. All different risks that you face when you invest in real estate, and everyone should know these risks when they get involved in real estate. But the way we really mitigate all these things from a company standpoint and from working with our clients and our investors is market risk. We specialize in certain areas. We have conservative underwriting, third-party diligence. So when we actually use investors' capital and we disperse it across multiple deals, we're getting a third party to actually underwrite our deals as well, which is typically banks. So a bank's not just lending on any deal. Budget controls, insurance, contingency fees, all these different things that really equate to mitigating risk. And I think one of the most important ones is where we're investing and where we're developing. So like I mentioned, we're specializing on the 95 corridor. For those who aren't familiar with it, it's one of the hottest markets in the country. It's been recession-proof time over time, and that's the seacoast of New Hampshire and Maine. We're developing in towns that's very low on supply and high in high demand. So I think that's a big part of mitigating risk too, is where you're developing, where you're investing, where you're putting that capital to work.
So Justin, you mentioned dealing with banks and getting some leverage there. So what are you actually using the capital you're raising for? Things like down payment, management fees, your salaries. Like, obviously you raised the money, but like you've got 50 million active projects right now. How are you doing that?
Yeah, so the equity we raise, that comes into the equity of the deals, which is typically 20% of any given deal, is where the investor's capital gets put to work. The other 80% is leverage with banks and debt providers. We use Kennebunk Savings a lot. That's a great example of who we're using. So the private capital that we raise and the actual fund we have open comes into the equity of these deals. And then the debt we source out to more institutional and stuff like that.
I don't know if he's on, but Rui Chavez, the head of mortgage lending at Bangor Savings Bank, he's coming to our private event this week as well. Definitely got to connect you with Rui.
Awesome.
So,
Yeah,
over there.
and then
who can invest? Continue this up on it.
Yeah, so when you're investing, so like I mentioned, we have a 506c fund open. That's what our company's structured on. So people invest mainly into the fund. To invest in the fund, you got to be an accredited investor. This kind of can be a few different examples. Net worth has to be over $1 million, excluding primary residence. Income over 200K for an individual if you want to invest, or 300K.
That's either or, right? So you can either have the assets,
Yeah.
or income.
All these things are either or. But that's to invest in the fund. Not all of our investors need to be accredited. If you want to come into an individual deal, there's way to structure LP positions that way to invest with us. But most of our investors are accredited. And then what to expect an investor when you're actually working with us and onboarded, we always start out with an intro call, and then or you come into our office to actually meet us. We have a presentation. Love all of our investors to meet the team. Like I mentioned, we're heavy in relationships. Then we go over the opportunities. Like right now we have the 506c fund open, which is delivering 12% annual returns with quarterly disbursements. Once you're interested, you commit capital. We got the portal docs all on set. Like I said, we have Juniper Square, which is our onboarding system. So you have one central place to track and manage your investment with us. And then from there, it kind of turns into a passive investment for you. You get updates, distributions, you get your quarterly disbursements. Since you're an LP and limited partner in all these deals, you do get K1s. So you do have tax forms. I'd say that's the most hands-on you have to be is with the K1s at the end of the year. But other than that, then you're truly passive, and then it's off to, keeping you updated through the day-to-day stuff.
Speaking of relationships, Justin, you missed a step. This is the steak dinner step. This is the ruins with the team step. We'll add it to the next time we do this. But
exactly. Yeah. So yeah, we got some events coming up. So it'll be anyone interested, we got to definitely connect.
So Justin and Tony's parts are important, but to me, it's all about the deals, and that's where Mark comes in. I think Mark has the funnest job at the company, which is like finding what to buy, what to invest, where to deploy the capital. So I wanted him to kind of give some overview of some of the projects that they're currently working on, some large scale, some small scale, what he looks for, how do you find a deal, how do you underwrite it, and how do you make sure it fits with the thesis of the fund. So I'll turn it over to Mark to take us through here.
Yeah, so thanks for passing it on. So this fund is really targeting single family homes, kind of up to 8 to 10 unit subdivisions, condo or townhome developments. So these are the assets that are currently in the fund. The ones outlined in green, we've already closed on, and those are all under construction as we speak. The remaining 3 with the gold outline, those are 2 of them are closing in the next 2 weeks, and then the other one's closing at the beginning of March. So this is just the beginning of what this fund will be investing in. These are all smaller scale, really diversifying what the fund is investing into. Quicker turnarounds. Most of these would be kind of a 6 to 9 month construction timeline and then sale. We do have other assets we're looking at that won't be a part of this fund, but they will be a part of a future fund that will raise.
Yeah, maybe talk to some of those. Isn't there a big one going on in Concord, New Hampshire right now? Love to hear about that.
Yep. So that's 83 townhomes. That's a 5-phase development that'll likely be complete in the next kind of 1.5 to 2 years. That one's fully funded, and we are the first phase is complete and being sold out as we speak. So we're hoping to start the second phase there in March.
I'm going to ask.
That's another example of what we do.
83 units. That's insane. Like, what did you pay for the land? Did it have ZBA approval prior to your purchase, or was the offer contingent on that? What type of money does that spit out? Like, do you put 10
Tony,
million?
I'll let you.
20? Like, yeah.
Tony,
Yeah,
I'll
I
let
can
you
kind of
cover
speak
that
on that,
that
briefly.
process.
So, this project was definitely interesting. So, this is one of the first projects that New Era Capital took on, and was really the inception of New Era. And we originally started looking into it beginning of 2024, and we were working with the individual that was actually going through the permitting process. So he already owned the property, and he was working through the ZBA and the planning board. But it was nice that we got involved pretty early, because me and Justin had a lot of say in how we wanted to design these buildings and lay out the kind of community and things like that. So we weren't directly representing the development process, but we were kind of there on the sidelines, coaching it along and making sure it was what we wanted to be when we actually took it under contract and purchased it. But that's definitely a larger project. With the sales price for the property, we bought for just over 2.9 million. But with a project like this, even though it's 83 units, it is all phased. And that's why we kind of did this within, 5 different phases is, if you do a large condo building, that's 50 units, you have to build all 50 units, complete them before you can even sell 1 unit. On a development like this, and what we really like about this structure is we can go in there and break this up into kind of smaller segments, not, flood the market with all these, units, and kind of do it as things progress. So that kind of, builds in the safety net and the risk mitigation to us and our investors, rather than if this was all combined in one kind of garden style building in all condos.
Okay. So 2.9 mil, that doesn't sound too crazy. How much acreage was it?
Yeah. So very, very different for New Hampshire. It was only 8.5 acres, and we're getting the 83 units. So typically you don't see a trade-off for that around here, but in Concord, they got the city sewer and water, and, they were able to allow the density.
So, Mark, you were licking your lips when you saw that deal. Was that one you got super excited about?
Yeah, it's a great deal, and we're really looking forward to that as we continue to go through the phases there. The first phase, the sellout's been going kind of as we've expected, a little bit faster than the appraisal that we got on it thought it would. So we're excited to get kicking on the second phase there, and hopefully finish up the second and third phases by the end of the year here.
Awesome. So question I tend to ask towards the end of this, and obviously we're getting close to the Q&A session, is like, how can we help you three on the phone? Like, we've got an audience here, we've got a community here. Like, what can we do to help you guys? It sounds like you do a lot of your construction in-house. We've got a dinner this week. A couple of general contractors are coming to that. A few more investors that might be interested in the fund. If we have a lot or a piece of land that might be good for redevelopment, like, should I be calling Justin or Mark? Like, what can we do to get involved outside of just write you guys a check?
Yeah, I think, the biggest thing is I think you hit all 3 pieces on the, right at the bat there. So, obviously always trying to educate more people and get more, clients and investors, which that's, really where Justin, comes into play. So anything along those lines, always, be connecting him because he's, the most knowledgeable and, always kind of in that space. As far as, new deals, that's, again, like you said, that's Mark's job. He's got the best part, he's just looking at deals all day, every day. But, it doesn't even, need to fit into kind of the structures we have. We look at, again, deals in, Massachusetts, Maine, New Hampshire, all different, shapes and sizes. So anything that, comes across, your desk or, anyone in the chat here, we're always interested in taking a look at it. A lot of the stuff we do is build to sell, but we are looking into a lot of, kind of build to hold assets as well. So it's not just one, size fits all. We look at a lot of different things. And then as well with the
electricians and plumbers on the New Era Capital payroll, or are they Fox Construction, or are they subcontractors?
Yeah. So that's all on the Fox Construction side. So, the nice thing about Fox is that it is a, totally, separate company, which, offsets the liability from New Era to Fox, with warranties and kind of, different contracts and insurance and things like that. So, it puts New Era in a very safe place as being just the kind of, owner and investor and developer. But on the Fox Construction side, we're always looking for more subcontractors. Always connect them with, myself.
Okay.
I always pass it along to the team as well, because I don't really do too much day to day anymore with the, the construction side. But we got a great team on the Fox side that, can always, reach out and try to make new connections, because, the more we do, the more, resources we need, and the more, partnerships, are better to have.
Yep. Awesome. So we're going to get to the Q&A in just a second, but I'm going to start the Q&A back on this slide. I want to know about a couple of these deals. Like, were these all land deals? Were they tear downs? Were they gut renovations? Like, maybe you could just take us through a couple of these, Mark. That's probably what the audience is most interested in. And then we can go into open discussion about real estate investing in general, the fund, wherever the audience takes us.
Yeah. I think the two most interesting ones here are probably 46 Main Street and then 332 Hanover. So 46 Main Street, we actually got approached from the seller as they were in a bind and needed to get out of the deal, but one of the foundations was actually already poured. So this deal is 4 townhomes spread across 2 buildings in downtown Exeter. And they approached us in, would it have been October or something around there?
Yeah, right around there.
We had to do a quick closing on this one, but the deal was already fully permitted, fully approved, and construction was underway. So it was a bit unique in that sense, where we really just stepped in and took over from the seller. But so that's a unique deal. And then 332 Hanover is another great one. The seller demolished an old home on the site and went through the approval process there. But this one is going to end up being pretty much a home with an ADU unit in downtown Portsmouth. You're 2 blocks from really all the.
Yeah, that's what I was thinking. Like, it's got to be right downtown. I want one of these.
Yeah, so this one, I believe we just started some of the excavation work the other day, or at least started demolishing some of the trees and stuff in the area. But you're a couple blocks from downtown. And a lot of the comps in the area, or a lot of the neighboring properties, are homes that are built in the 60s and 70s. So it's a really good opportunity to be the first brand new asset in that area.
Love it. Well, definitely keep me updated on that one. My wife, there's very few places in the world my wife would move, and Portsmouth, New Hampshire is one of them.
It's a good one.
Yeah, that's one of the ones the fund is invested in. So that's one.
Oh, sale. All right.
Yeah.
Beauty. So either way, I'm going to make some money. Good. All right. Well, let's pass it off to the audience now. Taylor, I know your father-in-law has some experience in private equity. I don't know if you have any questions on this. Britt, being in Wells, Maine, I don't know if you've seen any developments, but love any questions or comments to be popped into the chat. These 3 are super knowledgeable. So Justin on the investor side, Tony on the construction side, and Mark on acquisition. Whatever questions we have, would love to have them pop up in a second. And then we're going to get to what the next steps are. And probably what you're mostly waiting for is who's actually going to go to the Bruins game. So while we're waiting for some questions to come through, we can talk amongst ourselves, and I'll get this rolling with people who registered. All right. We got to add Devin. Devin's on here. Brittany. Do I have Brittany on here? Brittany Bryant. That's Brittany B. Taylor. Anybody that I'm missing that is not on the screen here because I'm going to spin this in just a second to see who wins the Bruins tickets.
Is Mark Phillips on there? Mark, you got a chance to win.
I put everybody on there. I got myself on there. I might be good.
I could walk.
Actually,
it'd be great.
Yeah. That's good.
Little secret here. I have 4 tickets to the season tickets to the Bruins, and I'm offering 3. So I'm coming with whoever's going. All right. Johnny Monroe is not. Johnny Mo. Johnny, from the insurance side, do you have any questions other than do these guys need an insurance broker? And yeah, Taylor. There he is. Here we go. Mitchell, where do you guys see NEC in 5 to 7 years? Different or same markets, bigger or smaller projects? What are the next steps with the growth of the fund? That's a great question, Mitchell. Thank you.
Tony, you want to take that? You want me to take it?
I could take it.
Yeah.
Over the next, 5 years, I think we see ourselves, mainly in the same markets. We really do love this kind of seacoast of New England. Obviously reaching out probably, towards Portland a little bit more, probably down towards, Boston a little bit more, as things kind of expand. Kind of coming up this year is, what we have, our eyes set on of exactly how to expand. And one of the big things is, making these new other, fund opportunities that are going to, target different returns, different kind of asset classes, and kind of have the ability and the option for when a new client comes on. Right now we have one fund that's currently open, but the goal is to have, multiple funds that are open at a time that, have different kind of criteria. Maybe it's a shorter hold time, but, a lower kind of, rate of return a little bit, kind of, I guess you could say more risk mitigated in a sense. Because it's shorter time, then, kind of have a fund that's, open, that's tackling larger projects, kind of like the one over in Concord. That would be, a longer period. It would be, a 5 to 6 year fund. But, that would kind of be giving off higher returns because of the whole time and just kind of the risk profile. So as things kind of, produce, our goal is to kind of have, the different kind of, funds to, help our investors diversify. We don't want all their money just in kind of one asset class. And then really, just, bring more clients on, one of our goals this year is to bring on another 25 clients. As far as last year goes, we kind of stopped, doing a lot of outreach in July just because we had a lot of projects in the pipeline. We already had, about $5 to $6 million under management. And we kind of, cruised out the rest of the year, giving those returns and executing on those projects. At the start of this year, launching this fund, we've definitely decided to, really grow the client list and start, bringing more people on and putting their money to work for them. So that's always a big goal, is just to work with as many new people as we can and, get them diversified.
All right. Another great question from Brittany coming in. I'll let Mark take this one. Where in Southern Maine do you feel is the hottest market? I've got particular opinions on this too, but love to hear Mark first.
Yeah, we're looking at a few different places right now. We actually, on Friday, got a deal under contract in Kennebunkport. So that's one that we've done a few deals in. I think we have 2 that are fully built or being built right now that we'll be selling shortly. And we have a couple more we have our eye on there. And where we're seeing some of the larger things that Tony was talking about on the larger kind of condo developments, things like that. We're seeing a lot of that in Kittery, which, makes sense. You're right near Portsmouth, and it's just across the water there. So I think those are 2 where we're seeing a lot of the opportunities. There are obviously other towns like Ogunquit. That's a great town. There's just never really anything for sale. But I would say those are some of the ones we're seeing the most opportunities.
Yeah, obviously the 95 corridor in Maine is 12 beach towns, south of Portland. Yeah. It's kind of crazy how packed it is. Yeah. My investment philosophy is quite different. It started differently 15 years ago when I first started buying property. It was I wanted to buy stuff near true infrastructure, waterways, highways, hospitals, education. So I spent all my time and energy acquiring properties in the Boston area. And then now that I've transitioned over to mainly focusing on Airbnb and ADU, I'm looking for places where zoning is really important. I own a property in Lebanon, Maine. They have an amazing zoning law in Lebanon, Maine. They say for every 4 dry acres you have, the first 4 dry acres you have, you can build 1 house. For every 2 dry acres over that, without any variance, you can build another single family home. So like you go buy 30 acres, you can have like 27 units, single family detached on separate septic. It's just a really nice place to buy property. And then on the Airbnb side, that 95 corridor is probably the worst place you'd want to be. There's heavy regulation. There's political turmoil. There's a lot of shit going on in that part of Maine. But the towns just inland from Kennebunk, towns like Arundel and Sanford and Lebanon and Newfield, like those towns are great Airbnb towns because you look at a map. If you have something super unique and you zoom out on Airbnb, you might not even know that you're not right next to the coast. Like I have a highly performing property in Sanford. It's 18 minutes to Wells Beach, but it's the only property that sleeps 20 plus people with a pool on a lake. So like it absolutely smashes it. And I could never afford that house in Wells or Kennebunk, but in Sanford, it's like, $1 million property, maybe 1.2. So like it's very easy to make it work there.
Yeah. I think it depends on the product. Like you're doing a lot of rentals. Our products all build to sell. So we're focusing a lot in those towns where it's like people
It's almost
want
the exact opposite.
Yeah. A nice vacation home where they want, a place to retire and go. So just a lot of there's different avenues.
Yep.
What did
right.
what Brittany think though for best place to?
Yeah, Brittany, what do you think the hot towns are for you? You're in Wells, obviously. And I have to ask Brittany, are you related somehow to Nick Lottie? I'm guessing that's how you found out about this one. If you want to pop in a chat here. Wish we could put people on stage. That'd be easier to talk to them. While Brittany gets back to us on what her thoughts are with the top main markets are, I'm going to go ahead and spin this. I've got season tickets, so it's really any game that I have available. I think I have a bunch in March, and we could definitely get together. So let's go ahead and let this thing spin. Oh, yeah, Kennebunkport, Algonquin, and York. Love York. Long Sands is where I grew up going to the beach. All right, let's see who won. Chris Booth. He is a member of Ferncroft Country Club where I just joined. He'll be pumped to go to the game.
Nice.
Yeah, poor guy. Last time I saw him, his kids were throwing up on him at the golf club. We were having it was like a Halloween dinner. I was like, so Chris, you deserve the tickets, bro. We'll definitely get together for a game. We've got a couple more questions here, guys. Awesome, Brian. Okay, great. Mitchell said, where do I find you guys on social media? All right, so for me, it's at Top Shelf Vacation Rentals, or if you look at my thumbnail, at Alex McKenzie RE for real estate. And then these guys, if you follow me, I just tagged everybody on this panel on my Instagram. So I'd say follow me first and look at my story to find the other guys. All right, we've got about 10 minutes left or so. We do have another question from Taylor O'Brien. Do you anticipate scaling fund sizes or lowering investment minimums for future to scale LP participation? Are you more interested in maintaining smaller personalized investor community? Maybe Justin take this one on the fund size and minimums.
Yeah, no, absolutely. So I mean, right now our definitely goal is to scale the fund. And we want to, our goal this year, we're about $7 million under management. We want to take that to around 20 million under management, because that allows us to, really start getting into different deals. And like Tony mentioned, diversifying what we're invested in along with our clients and what projects they're invested in as well. I would say, we do have a few investors that do come in for under 100,000. And that's what's great about, investing with us is that it's a conversation. So, if somebody really wants to learn more about what we're doing and wants to participate in the deals that we have access to, but they don't have 100,000 to write a check, then I would say reach out to us. Let's have a conversation. Maybe that's $50,000. And maybe you want access to some of these deals. So I would say the minimums, we set it at 100,000 because that's typically where investors come in, plus, 100 to 500,000 is like our average investor. But we're open about making new relationships and allowing anyone to have access to these deals and to participate in these deals. So I would say, if you're interested, Taylor, to have a conversation and get you involved.
And Taylor, that's where I came in. I wrote these guys a $100K check, and I realized maybe I missed it or maybe we didn't hit it. But could you talk to me about how quarterly distributions work and what's your target way to get people their money back as the projects are happening? Like what should I expect? I gave you $100,000 a couple weeks ago. When's my first check? Like when would somebody else get a check as well?
So it really depends on what you invest in. I'll talk particularly onto the fund that we have open right now, and this is kind of what we talked about today. This fund is going to be, you get quarterly disbursements of interest. It's a 12% annual return. You get quarterly disbursements of interest only once the fund is cash flowing. And what that means is once the properties that we're taking on, that Mark went over, we had 6 projects. Once those projects start selling and there's money and profits coming into the fund, that's when the fund is cash flowing. So we're anticipating this fund's going to be cash flowing in the next couple months. And then that's when you'll start getting your quarterly disbursements of interest only. The fund lifetime is 3 years. So you invested, a couple weeks ago, Alex. So your principal will be locked up with us for 3 years. But in the next couple months, you'll get quarterly interest payments, and then you'll get your principal back at the end. Any quarterly payments that weren't made, maybe in the first couple months because the fund just started and there's no cash flow coming into the fund, you would get at the end.
So at the end of 3 years, do I expect $100K check, or is there any way to grow that, or is it really I make money on the disbursements and then I hopefully get the full 100?
Yes, you would be expecting at the end of the 3 years your $100K principal check back, and then anticipating that throughout the course of those 3 years you'll make $36,000 worth of interest that is spread out quarterly throughout the 3 years. So
and just to make that 10x bigger, if I gave you $1 million, you're saying you could give me back,
yes,
$360,000 in interest over 3 years, and I would get my $1 million principal if all goes well.
Exactly. Yeah. So that's how it would be structured. So if you gave us $1 million into this particular fund, you would be getting $120,000 of interest a year. That would be quarterly disbursements too, around $30,000 a quarter, which is a great, you compete. I know Alex, you told me a story. Somebody just bought a few $1 million condo and, he put a hefty amount down and he's getting great cash flow. He's making $11,000 a month, which is great. But, you could put similar amounts of money with us and you could get similar cash flow, quarterly and without zero headaches, without zero exposure to actually the day-to-day responsibilities. Yeah.
I mean, that's my whole day-to-day is finding Airbnbs for people that, can get a cash on cash return of 18 to 24%. But yeah, it's a lot of work. And a lot of people I talk to, like I'm very open in these discovery conversations, like how handy are you? How familiar are you with walking into a Home Depot? Do you know where shit is? Like, if that's not the case, maybe it's just an intro to you guys, because everyone wants to be in real estate. It's really just what level of involvement and like what type of returns you're expecting to get.
Totally. Yep. The real question isn't, should I be investing in real estate? Because everyone knows they should, whether it's in REITs or it's in, investing with guys like ourselves or investing, in rentals and stuff. But the real question should be is who should I be investing with? If you just want to invest on your own, or if you want to be, doing the JV partnerships, or if you want to invest truly passive and invest with guys like ourselves, that should be the question you're asking yourself. It's not if I should be, because everyone should have part of their portfolio in real estate.
Love it. I've got a question for Mark. I know you're on mute here, Mark. I'll put you on the spot. I live, on the Route 195 corridor north of Boston, and I see a lot of huge development going on Route 1, really like quarter mile back off of Route 1 in places like Saugus and Peabody. And they're building these huge 200-300 unit apartment style complexes. My questions are, who's doing that? And is that also some type of private equity fund that's saying, hey, you know what? I'm going to do build up and I'm going to buy and hold. And like, would New Era ever do something like that? Would you ever have a fund specifically for a new 100 unit build that maybe gets $2,000, $3,000 per unit, and you're just spitting out cash flow from rental income? Is that something you guys think about?
Definitely. Yeah. We actually are looking at a few opportunities that are in that kind of rental development side of the business. Those, my guess is the majority of those that you're speaking of are larger institutions that's really what they do is build these and then either hold them or sell them or transfer them to a different fund they have. But groups like us certainly do that. We are looking at one actually in Charlestown that we're hoping that could work out. That'd be kind of 200 plus units.
In Charlestown, Mass?
Yeah. The tricky part for building the rentals right now is you have to have kind of 150 plus units for it to make sense. The smaller ones are really tricky to make the numbers work on just because of the costs and then the rates on your loans as well. Building to hold is difficult because when you refinance after the property is stabilized, it's very, very difficult now to sell or to refinance and replace all the equity you came in with that was in for the construction and then bring in additional equity, or you'd have to bring in additional equity that would be owning a 4 to 5% kind of cap rate brand new deal, just because the returns aren't really there. And most investors, if an investor wants to be on the development side, they're going to get a much higher return than they would be if they were buying a brand new Class A multifamily building. So it's just kind of you have to have the equity on both sides. And then lastly, on these kind of big deals, you just need a lot of equity in the deals. I mean, the one that I was mentioning before that we had modeled out, it's about $20 to $25 million of equity just for that deal. Wow. So that would be a situation where we'd likely partner with a larger group who would bring a big check to that, and we'd also bring money in, but they would have a lot of the money invested, and they would let us kind of run the process and run the development, but we'd have to find a kind of a big partner to come into that with us.
Yeah, maybe we'll meet them Thursday night.
Yeah.
Be fun. I've got two last questions and we'll wrap it here, guys. It's 12:56. I do want to be respectful of people's times. There's 4 more minutes left. I'm going to talk a little bit about the tax benefits of real estate investing, but before I do, are there any tax benefits of fund investing, right? When I get quarterly disbursements, am I paying just ordinary income tax on that? Can I divert that into like a trust or an LLC? Can I defer gains? Like how does that exactly work?
Tony, if you want to take this one, but it's ordinary.
Yeah. It's ordinary income is what you're getting, taxed on. And that's where it comes out to the end of the year where you get a, K1 tax form that, since you are, an LP, that's a limited partner, you truly are, a partner in the deal. So, as far as, on this fund itself, there aren't any, specific tax benefits, but other funds like this that, again, kind of do larger multifamily transactions, that's where there can be some, depreciation through, the asset that can be passed down on taxes to investors. But again, that's a little bit different of a structure and, on larger multifamilies.
12% with some tax, it still seems pretty reasonable for not having to lift a finger other than writing a check. So.
And I will say we do have some investors that have invested through like their Roth IRA and things like that. So they kind of are doing that through a different platform. So there are ways, and that's kind of more so on the investor to work with their CPA and accountants and tax planners. And
we should talk about that for me personally. I have a SEP IRA, I've got a 401k and our do shit for me. It's been flat for like 10 years while the market's been running like crazy. So let's talk about that Thursday. And then in terms of like tax benefits of real estate investing, like the taxes, if you go back to that linear scale of like active and passive, the taxes are amazing when they're active because the government wants you to do work, to invest and like put people to work. So like the rule of thumb, if I find somebody $1 million Airbnb property, and let's just say the structure is worth $900,000 or $800,000, typically 30% of that structure can be written off in year one. I work with Derek Denard at Aiming USA, and like it's crazy. So like on $1 million house, you bring 20% to the table, right? So $200,000. A lot of my clients are getting $300,000 year one write-offs, depending on their tax bracket, 30, 40%. A lot of them are getting 6-figure checks back from the government April 15th just for putting that active real estate investment into service. So like that's how I've been selling properties these last 4 or 5 years is like tax is your biggest expense, right? How do you get away from paying tax? But the other thing is like you're now starting a small business. So like a lot of my clients will have a breadwinner who's the wife and the husband literally just retires and goes and manages the Airbnb property. He saves the family $50,000 a year by being a real estate professional. He gets some cash flow, and then that year one hit against the wife's income if you file jointly, it's just kind of a no-brainer. So like I think the message to this group, this audience that's on here is like talk to a lot of different people, look at a lot of different options. Like Airbnb might not be for you. An ADU is probably for everyone. You should just have one if you live in Massachusetts. Passive investing, if you can write a check for $100,000 and leave it sitting there for 3 years, 12% sounds pretty freaking great.
Definitely. Yeah, a lot of different options.
All right, it is 1 p.m. Thank you to our panelists for joining. Really appreciate the audience for hopping on. And we will have this recording on YouTube later today. We'll have a bunch of different clips going on to Instagram, LinkedIn, etc. So thanks everybody for joining, and we'll talk to you soon. Take care.
Thanks everybody.
You guys.